Hi there. My name's Paige Smith. I'm a reporter with Bloomberg. I cover consumer finance specifically. I'll be moderating the panel today. And I figured first we would just kind of go down the line and I can introduce these wonderful experts who are going to chat with us this morning. So we have Christina Tetreault, who is the Deputy Commissioner of California's Department of Financial Protection and Innovation's Office of Fintech Innovation. We also have Yana Miles, the General Counsel and SVP and Head of Regulatory Affairs at the American Fintech Council. We also have, just to my right here, Dan Hury, Deputy Chief Compliance Officer at Upgrade. And at the end, we have Ryan Naples, Director of Public Policy at DailyPay. So we want it to be just sort of conversational here, so you folks get sort of as much out of this as we can. And I figured we would just kind of go down the line to start and say, you know, if there was sort of a magic wand and you could wave it and imagine sort of an area of a sort of regulatory, to sort of clarify the regulatory landscape, what would that magic wand do, and maybe a particular state in mind? What if you had that magic wand, what would you sort of do with it?
Well, I think I'm not going to be quite so magical, but I think that among kind of the current field, the CFPB's current Section 1033 open banking rulemaking is a very interesting and important piece of public policy with, I think, clear potential benefit for the financial services industry in terms of promoting innovation and potentially increasing competition for financial services. And if it ends up being a successful rulemaking, I would hope would lead to clear consumer benefit. So.
Well, if I had a magic wand, I'd want to do a great many things. But on this topic, I think across the board, at 1033, I'm like geeking out, waiting for that. I was joking with some staff earlier saying that's like Marvel Phase 4, 5, 6, like what's next? But if I had a magic wand, I believe that in this discussion we're speaking to states, but from the federal perspective, I've always looked at federal rulemaking and lawmaking to be more of a floor and not a ceiling. I believe the states, California being a wonderful example, are really leading the way and catching up with innovation, catching up with different products. But if I'd wave a magic wand, I would say to really continue to get from our regulators at the federal and state level more clarity on some of the emerging markets. We've got, buy now, pay later products. We've got earned wage access products that, Ryan will be able to speak to. And there's a lot of great things coming out of these products, and we want to see the actors that are using these products responsibly and classifying them responsibly, as American Fintech Council membership strongly believes in. I think that would be extremely helpful as we proceed to weed out, the predatory actors and to let the better ones thrive.
Yeah, I would say I definitely think earned wage access is very interesting for obvious reasons, but I do believe that I think more broadly, California does have a unique fintech approach in that they're able to deal in a flexible way with products that are new, that come to market today, and that are going to be coming to market in the future. In terms of waving magic wand, I do think on-demand pay does need to be dealt with carefully and correctly, and I think the state of there are 14 bills that are active actually on demand pay, which is very exciting. 11 of them are still active actually, so which is even more exciting, why I was nearly missed this panel. And then there are 6 regulatory actions underway. So there's a lot going on in that space, but the state of Nevada, I think, probably has move their bill forward in a way that probably makes everybody a little bit unhappy, which is how you're getting things correct, right? And is probably moving forward and likely towards the finish line by the end of the month. So lots going on this month.
Cool. So let's shift gears a little bit. I have a question for you, Christina. Just in terms of California, we know it's sort of one of the most consumer friendly of the states, but I guess I'm curious, when you're sort of looking to other states that are either doing things well or looking to sort of regulations that you'd like to emulate, or maybe certain initiatives you would like to implement, what are some other states that are doing really exciting things right now? And also, what are you folks doing that's really exciting?
So thanks for the question, and great to be here. Thank you to American Fintech Council for this event, or for this session in particular. California is trying to be a national model. So the Office of Financial Technology Innovation, which is the language that's in the statute that created the office, the law that created the office is the California Consumer Financial Protection Law. And it talks about beneficial access to innovative products and services. So when I came to the department to stand up the office, I looked around at the global models, right? You have the Financial Conduct Authority, their particular model. We've got the state offices, we've got amazing federal offices. And the first thing that I did was I did outreach to folks in those areas, right? So I talked to Dan Kwan, who ran Project Catalyst, and I talked to Ann Epstein, who was running the CFPB's Innovation Office, and I talked to Paul Watkins, who had run that office before. But I also talked to founders, and I talked to VCs, and I talked to lawyers, and I talked to advocates, and I said, what are the challenges that you're having when it comes to trying to bring beneficial products to market, or what are the concerns that you're seeing? And so I tried to learn from that outreach. That's one component. The other thing that I did was I did inreach. So I talked to the leadership in the department, some of whom had been there for decades, and some of whom were new like myself, and said, what do your programs need, right? How can this office help serve your needs for your programs? And the responses from both of those shaped the day-to-day conduct of the office. And what did we learn, right? So the external stakeholders said, we need an easy way to talk to the department. So what did we do? We started weekly office hours. We have basically drop-in virtual office hours. Anyone can meet with us. All it takes is sign up so that you can get the Zoom link, right? We also say yes to every meeting request that we get. And I have met with consumers. I've met with, I'm not joking, high school students who are looking to start fintechs. I've met with, established companies that are looking to extend their product lines, right? We are super committed to this external engagement component because we want to help provide early stage guidance. We don't give legal advice to help people be compliant, right? So there's this engagement component. The other thing that I heard from the inreach was things change so fast, right? There's so much happening in fintech. And we are in our area, right? We're focused, we've got our head down, we're moving forward, we're trying to do what our programs need. Your office can help me in my day-to-day job, is what I heard from my colleagues, by helping us understand, like, what is this big picture, right? So, all right, now we've got an internal education component. We've got this external engagement, we've got an internal education component, and then we've got the third piece, which is there are a lot of emerging issues that cut across programs. So who's going to coordinate? Who's going to facilitate? Who's going to make sure that there's a number of different folks, not only those embedded in their programs, but also talking in a coordinated way throughout the department. So when we really think about how we can be this national model, right? We've taken from what other groups are doing. We've also listened, and I'm just going to brag here for a second. We went out earlier this year. We did a survey of our external stakeholders, and we said, would you recommend meeting with the Office of Financial Technology Innovation to others? And we got a 90% yes. So that's a net promoter score of 90% yes for a state financial regulator, and I'm super proud of that.
And can I also just say, I think it is also, just to put like a finer point on it, I think it's really special to have the ability to have a regulator be able to, have the flexibility to not be like jamming financial products into like old legal paradigms and being able to addressing the consumer risks that actually exist as opposed to trying to address consumer risks and consumer risk profiles with laws that were, written for other financial products. And I think that's like a real key difference in being able to take, an honest, like substantial and careful look at how products what the risks are that are presented to consumers. And I think California is unique in that they're able to do that through regulation, as opposed to most other states have to really do that through legislation, unfortunately, which is like far more complicated and a lot harder, I think, and a lot more disruptive. And I think it's really a great thing that law passed, to be honest. So I don't get a lot of other takers, to be honest, as I try to push that law, as you can imagine.
So to shift gears to the compliance folks on the panel, talk to me a little bit about your experience when interacting with state regulators. What's worked? What are some examples of maybe things moving really efficiently or effectively? What are some struggles that you face on a daily basis?
Well, I think to echo what Ryan was just saying, working with regulators who are transparent, collaborative, and are kind of open to dialogue is always particularly helpful. As a recent example, we had our first in-person examination a few weeks ago since the start of the pandemic with the Idaho Department of Finance, whom we hadn't had an examination with before, and it was generally a very kind of productive session. I think it was helpful how open they were about kind of their objectives and their priorities, and they were also very helpful in kind of helping Upgrade understand sort of from both from an Idaho as well as kind of a national landscape, what some of the interesting initiatives are among state regulatory agencies. For example, some of the recent progress in coordinating among kind of the multi-state regulatory agencies, regulatory coalitions, for example, kind of the group of state consumer credit agencies, the group of state collection agencies, and sort of their efforts to coordinate on policy and examination priorities. So, I think that generally is a good recent example. More generally, I think that one thing that we would like to see more of is, along those lines, greater coordination from an examination perspective. I think that would be really helpful. A common experience for us is we'll have a state come in and, as part of their kind of pre-examination request, they'll request a lot of data, a lot of documents from us that's not really that dissimilar from what other states have requested, but that, is sort of bespoke, right? It's their own format, it's their own nuance to it, and so in doing so, it's doable for us, of course, but in the context of a nationwide business model with, dozens and dozens of different agencies supervising you, it would be helpful to kind of have a common set of examination requests that more states subscribe to, similar in some ways to what they have at the federal level, with then, of course, the opportunity for state-specific supplements to that, right? That would be particularly helpful, so that fintech companies are kind of able to more easily meet those types of requests. I think another thing I would highlight, just very kind of tactically, would be the level of consumer personally identifiable information that's often requested by states, where typically, I mean, not typically, but not uncommonly, a state will come in and they'll say, give me the list of all Upgrade customers in my state and give me all of their PII, which, I mean, of course, we'll provide if asked, but I think from our end, that seems kind of unnecessary and presents, some potential privacy concerns and kind of information security concern. So I think our preferred approach that would be great to kind of see adopted as a standard at the state level would be, redaction of PII where it's unnecessary, right? And where it is necessary, of course, happy to provide that. So, yeah, I think that we're relatively new, and I should say the majority of, I'm actually gonna maybe answer the question a little bit differently. We probably, I would say, we're a non-credit fintech, and we kind of look like a loan, kind of look like a money transmitter, kind of look like 100 different things, but we, when we're working within a state and within the legislative process, we really do look at, what we're really doing is writing a new license for earned wage access that addresses the consumer risk profile for the industry. And typically what we're looking at is the lending law, the money transmitter law, or the debt servicing law. And 9 times out of 10, the lending law does not have enough protections that make any sense, because it really is just there for installment
payment financial products, really. And so what we really are typically seeing is like really strict or like really robust disclosure for licensees under the money transmission law, and then all the disclosure requirements maybe for the lending law will also take, and then we'll also take some, I think some like sharing agreements and things like that for other states. And then we'll kind of be like writing based on like new consumer protections based on how our products actually work and interact with consumers. And so I would say that when we're interacting with banking regulators, they want to see, well, where are you actually getting these like licensing ideas? And, you know, because we're not trying to like build something we're not trying to like, you know, make something up and make something easier on ourselves. And I think that that's been very collaborative, and they've been like helpful in helping us kind of write things. There's a lot of like building the plane as you fly it, but when you're writing legislation, that's really not the case. Like the plane has been written for like 100 years and has been perfected like probably every legislative session in a small tweak or something. So the bones are there, if you will, for us, and then we are able to work with the parts that make the most sense. To be honest, a lot of the things that I was mentioning where everyone ends up a little bit unhappy has to do with the robust disclosures around what you need to disclose around to get an actual license, what the reporting requirements are every single year, which, you know, for better or for worse, for a company like ours, we actually welcome it. I think for other companies, they're not so pumped that the model legislation that is, you know, I say this in quotes, we're putting into every single bill are modeled after, you know, MOUs from California. Thank you, by the way, for that. I mean, like so there are things that we have to work with, and when we do go to talk to regulators of all different stripes and flavors literally from Texas to Wisconsin, they do want to see, well, like, where are you coming up with this? And that's been collaborative and important. And, you know, it is new and it is exciting. It's busy, it's a lot, I'm not gonna lie. It's supposed to be less work, I'm just kidding. So it's been fun.
Let's kind of continue on that conversation for a minute and just look at, chat about sometimes this mismatch, I guess, between the pace of technology and perhaps the pace of some regulators. I mean, you walk around the expo floor and it's like innovation is just sort of everywhere. I can imagine it's a lot for everyone to keep track of, but I imagine it's particularly challenging for folks who are trying to regulate this space, but it's also challenging for folks who are trying to stay compliant. So talk to me a little bit about how you folks have dealt with that.
I know with American Fintech Council's membership, our trade operates a little differently. We're not running from the law. We want the law. We want it to be reasonable. We want it to protect consumers, and we want it to meet that balance of protecting markets and encouraging innovation. I think it gets so complicated on the federal level. I mean, this is a state track, but I'm a federal girl, so I'm going to have to throw in my Fed stuff. But it speaks to how important and how important the work of states like California. But on the federal track, and we've got some staff here today, so I'll watch my mouth. But we definitely have that tension, and it's not just with what is a loan, is this a loan, is that a loan? That's one question. Then there's how is it reported to the credit bureaus? How is it reported to the debt collectors? How are we reporting defaults? How are we reporting delinquencies? And all of these things span back to laws and regulations at the state and federal level that are 30, 40 years old. I'm still that person that thinks the 90s was like 10 years ago, and then I get reminded that that's not true. So we're looking at laws from the 70s and 80s. And so there's this ecosystem. I do believe the regulators are working hard. I mean, the challenge I would imagine from their end, and Christina, I'll shut up in a second. Christina can speak to all the great things California's doing that I think are great. Is monitoring the market. There's got to be some monitoring. There's got to be some data collection. There's got to be time that goes by. We're also, I know many of us are probably still kind of in the wake of 2008, markets that grew very fast and that, outpaced laws and outpaced the current regulators and resulted the way it resulted. And so there's a lot of moving dynamics. So I would say, the law overall is not caught up with the innovation, but I think that there's a lot of moving pieces that it takes to get that car moving, and I do believe the CFPB, the OCC, and New York, California, others, even Texas, even Texas, are.
You'd be surprised with Texas. I'm not going to lie.
Yeah, I'm not
They're
messing.
banking
I'm not
regulators,
messing
no
with
joke.
Texas, okay? I think there are a lot of moving pieces. There's a change in the market. We've had how many crises have we had in the past 10 years? There's a change in the need. There's a change in the way people are banking. We're not seeing banks there were certain neighborhoods that never saw banks, and there even others they're disappearing. People are working with their phone. You have people low income working with their phones. The pace is changing very rapidly, and it would be unrealistic for me to expect something happening. I would be a little afraid without, to dive into regulating a market you haven't observed yet.
Right, and I was just going to add, I think what's a really interesting balance is whether or not to codify an industry's best practice. And it's really, it's usually the market leaders and the largest companies, and it's easy for someone like me who comes from the largest earned wage access company, and we're fully integrated with payroll and time and attendance, so we have a very low consumer risk profile. We don't deal with a lot of messiness, so I'm great with every single consumer protection, in every single really high penalty, when we're socializing all of these different changes to these bills, or we're socializing all of these things. To be honest, I take a lot of them from a firm's business model. Whoever is here from that, they've done quite a bit, I'm not gonna lie. Don't understand how they make any money, I'm just kidding. But what do you do when you have a best practice? Because is it harder then to enter the market for smaller companies? Is it harder for smaller companies to actually grow? And we've had situations where there are smaller earned wage access companies that are integrated with payroll and time and attendance. They only have one general counsel. They get the bill 7 days before it's about to be introduced or passed, and they're like, why did you guys put this into law? And it's well, it's actually good for consumers. They're like, well, we'll be able to afford it or grow, or who else can really make it into there unless they're big like you guys. So we're like, well, okay, well, we'll have to work on that. So I think that's a really, interesting thing happening now as we're seeing new fintechs, and as Yana said, asking to be licensed, asking to be regulated, which is probably I heard someone from Square/Block talk about it's late stage capitalism, which is another word for mission driven financial services companies, asking for the certainty that comes with the transparency to regulators. So it is definitely a journey. I mean, California does get a lot of, like I said, they are doing it right, where they get a lot of data from a lot of different industries, I think, if not every month and every quarter, and that is probably the most responsible way to do it. So another plug for that law, to be honest.
I would just add, from a compliance perspective, I think that the rise of reg tech has been kind of interesting on this point. I think, in general, offices like Christina's, Project Catalyst and so on and so forth, I think, both state and federal agencies have been, very proactive about meeting with reg tech firms, understanding their technologies, and so forth, which is great. From kind of a supervision examination perspective, though, I think sometimes, not always, not even most of the time, but sometimes there can be a little bit of a disconnect. For example, identity verification. There's a lot of interesting companies out there doing things from a reg tech perspective, and so Upgrade, like a lot of fintech companies and banks, uses a combination of collecting someone's driver's license, documentary verification, along with leveraging third-party data sources. And there are times that some examiners might not be kind of fully up to speed on sort of the non-documentary approach, right? And so sometimes if a customer's file doesn't have a copy of a driver's license in it, there's still questions, right? So.
Christina, do you want to weigh in on just how sort of that mismatch perhaps between, or maybe not mismatch, but just kind of that tension between regulators and kind of the pace of technology?
I think the main thing I would put a plug into is to come meet with us because of the reasons that you've heard surfaced on the panel, right? Which is we're getting the big picture view, but we want to hear your particular story and how you fit in. And it's really helpful to us to get that context directly from the people who are living it. So I think there is definitely the faster pace of technology, but there's also, we don't know what we don't know in the particulars, and we can really benefit from hearing from you into how you fit. So that context is really key as well as the detail.
So just to kind of keep talking about these sort of different tensions that businesses face, but also the regulators face. I mean, we sort of might look across the United States and there's kind of a patchwork of laws that businesses need to be compliant with and regulators and individual agencies that you folks might interact with on a daily basis. I mean, how do you sort of navigate that patchwork? Would you prefer that it not be a patchwork and that there just be sort of a uniform set of laws and regulations and things you have to be compliant with? What are your sort of thoughts on that state versus federal? I know Giannis really wanted to weigh in on the state versus federal tension maybe.
Well, I mean, I don't want to be too repetitive, but I actually, like I said before, I think that would be helpful, is for there to be a federal floor across the board. And we've talked a little bit about the challenges of that being a timely piece that comes out. But I actually think that, I'm just hyping Christina so much because she's so great, but, what's happening out of states like California, New York, and even smaller states, Connecticut, others, I think that what we're seeing is, they're leading the way and they're leading that trail of how to address, markets, emerging markets, changing markets. And, the United States, it's such a huge country. I just forget, it's huge. We have a lot of differences. There are certain pieces lending in a FEMA emergency period, that's going to impact a state like Florida, and I'm not picking on Texas, but it's going to impact the Gulf states a little bit more. When we're, there are questions, about, reporting certain debt or, underwriting certain debt, that might play out differently in the winter in Chicago, in the winter in Syracuse. There are a lot of different, I'm listing environmental things, but as an example, but there's a lot of different markets that require a different touch, and I think that the patchwork on the one hand, there's certainly compliance questions and licensing questions that can be difficult for folks operating in multi-state or across the country. That can't be understated. But I think that if I were a federal regulator, I would look very closely to states, especially like diverse large states like California, New York, and others that do have different geographies and do have different populations and do have, all states I think have different income levels, so do have that diversity across the board to get a sense of the first people with that are cutting down that trail and seeing what the pitfalls are, what's worked and what hasn't. So there's benefits to the patchwork in terms of coherent policy that has proven to work, or if it didn't work, finding those pitfalls and addressing them and identifying ways to avoid them in the next round of rulemaking and lawmaking.
And I definitely do agree that I think a patchwork is another barrier to entry for all startups. And I do think that a federal solution is always preferred. I think that it is a little bit pie in the sky to hope for one. I think realistically, it's usually better to have everyone involved in an issue to work together in a collaborative way in one state. To be honest, I think the privacy law that came out of Virginia was almost like a good example of a way for other states to kind of look for like a floor, to be honest, and you saw other states that wanted to have more protective privacy laws kind of add on to that that kind of floor, and then states that wanted to see like some like I think like easier licensing requirements, like not be not have as tough of a bill, but obviously that's still like a state patchwork, which is definitely, I think, a barrier to entry for smaller, not just fintechs, but for all companies. But I also think it is like human nature that like the states are the laboratory for democracy for a reason, and it is where the issues kind of have to get talked about, and we have to see like how these things get not just implemented, but also enforced. I think is really helpful to see before the federal government works on it.
Gotcha. We have around 5 minutes left or so, and we actually have a few questions that were submitted. So I figured I would go through some of those and see if there are any that might pique your interest. The first one is, how are small businesses with limited capital expected to deal with the panoply, great word, of state and federal regulations? We kind of addressed that, but if anyone has anything else to add, I would love to kind of hear your thoughts.
I would just hype again. I mean, it's an excellent question. We have, and that's, I think, exactly why the rulemaking for the federal rulemaking for 1071, 1033, and data laws coming out of the states play into it, because this is something that regulators really need to understand in real time. Smaller entities that have one compliance persons, two, that are looking to start up, that are looking to have that access. They've got these licensing fees here, these licensing fees there, this and that. That's, how are they expected to deal with it? I mean, that's exactly what why we need these data collection rulemakings, to prevail, is that so that we can see how exactly, we know that hurts small businesses. We want to see exactly how that hurts it, and we want to see exactly how to address that, because we don't want to say, look, people don't follow the law. We don't want to say that. I totally believe in exemptions, reasonable exemptions at the state and federal level for small businesses, but overall, I believe that that's a part of where we need to start at the ground level, with just seeing exactly what needs to be done to get these smaller entities into compliance in a way that they're still following the law, but they're not, spending all of this money on something other than getting their business off the ground.
And I would say that licensing in a lot of ways, especially for new fintechs like the one, like in the industry that I work in, like does help with, I think, with actual growth, to help you actually grow to be in a place to afford them, the regulatory costs.
So there's one other question that I think is great, and I would love to kind of hear your thoughts on. It's, can we ever expect comprehensive fintech or blockchain regulations, or will we be left with state-by-state differences in regulation by enforcement? I think the second part of that question is super interesting, just this tension of, are we going to see regulations, or is it just going to be sort of this moving forward? And I know this is a discussion on the federal level too, but regulation by enforcement versus regulation with laws. Well, you know what I'm saying.
The only thing I would add to this is, when we talk about patchwork, when I looked at it as positive and a negative. I think the patchwork, not enforcement, patchwork regulation and lawmaking, that can be used to inform at the state and national level. It can be used to inform other states. It can be used to inform, at the national level. And that, I believe, is, I think it is pie in the sky to expect it to be fast, as much as I'd like it to be. I think that by doing that, by following, what we've seen, we can get past, this notion of regulation by enforcement. I know that's like a hot button phrase, so I'm trying to stay away from it. But I think that's what this is where the states lead the way, to get us away from, the patchwork as the norm.
It is a hot button statement, but if you'd like to elaborate, you can go ahead.
Pass.
Christina, would you like to elaborate?
Pass.
Well, I was actually going to say, I feel like it is interesting, because it does seem like a lot of the fintech industries that get a lot of attention are the ones that engage directly and are looking to collaborate, I think, a lot with regulators. And with the exception of California, not many states have the flexibility in their actual laws to find alternative pathways to do things like monitoring or, alternative registration strategies or things like that. And so it's harder for regulators at the state level, aside from really California, to be creative when a new creative product comes to market. And so I think that's part of what state legislation kind of takes, is needed for, if that makes sense.
I think we're just about out of time, but any other closing thoughts that you folks would like everyone else to know before we conclude?
Come meet with us.
Come join us.
All right, folks, thank you so much for your time today, and thank you all for attending the session. Have a good rest of the day.